Welcome to Tangent PropTech, where real estate meets innovation and goes a bit off script. I'm Edward Cohen, PropTech entrepreneur and your host, alongside my co-hosts and PropTech venture capitalists Jeffrey Berman and Zach Aarons. On this show, we bring on a guest who's shaping the future of real estate. We dive into housing innovation, climate tech, the future of work, and everything transforming our buildings and cities. And of course, we go on some tangents. If you work in real estate, PropTech, development, or if you're just obsessed with making buildings and cities better, this show is for you. Because the best real estate ideas start with a tangent. If you're building something impactful in real estate or tech and want to reach our audience of decision makers, investors, and operators, email us. That's tangentcommunity@gmail.com. Hi, I'm Edward Cohen. Welcome to Tangent. Today on Tangent, we have Colton Pace, co-founder and CEO of Ownwell. Save money on property taxes. Hi, Colton. Where does this podcast find you?
I am in Austin, Texas today. Thanks for having me.
Not a bad place to be a renter or home buyer these days, I hear.
No, there were some ups and downs, but I myself am a home buyer here, so hope it continues to be as good as it's been.
Yeah, certainly the cycle there as supply has increased more than in other places. The demand is catching up soon. So let's talk about, you were a venture investor before launching Ownwell. You went from VC to founder. So what convinced you that property tax base, and let's just put this into context, last year there was $797 billion in total property tax revenue across all property types. What made you decide that this was the right place to focus?
Yeah, my entire career prior to starting Ownwell, there were small entrepreneurial ventures here and there. It was mostly VC investing and then asset management. Where Ownwell came from and where I started my career was working for a large family office. And the way billionaires manage their real estate, and specifically property taxes, as a very large expense, is totally different than my parents did or my friends and family really thought about their property tax. Property taxes is, as you mentioned, massive bill, second largest expense associated with most real estate after the loan, but one that most people don't do anything about. It's a bill from the government. We are trained to pay it, but I've learned and have seen and have built the company on the basis of you can do things about it. You should make sure you have every exemption you need. You should make sure you appeal it. You should make sure you review the bill to the fullest extent to make sure there's no way you can reduce it. And so that's really what Ownwell does. But that's why I left the investing side and founded Ownwell, and no regrets.
That's awesome. And you did this, I believe, around summer of 2020. What a
That's
time.
right.
Be greedy when others are fearful, and be fearful when others are greedy. I'm not calling you greedy, but I'm calling you kudos for having the courage when everyone was indoors, or most of us. Property taxes, they're the second largest operating expense for most owners after insurance. And around 66% of homeowners say their bill is higher than expected. So what's broken here, and how does Ownwell help fix it?
Yeah, I think when you purchase a house or a real estate investor purchases let's say small office space or a strip mall, right? Like you get the forecast that's in the packet and you're modeling from that. And that, because real estate appreciates at an uncertain rate, that is really never right. Even escrow for our home loans, when we're doing escrow, is always wrong. There's a shortage or a surplus one way or another. And that's because property taxes is not a fixed number. And people are often surprised in that school budgets are always going up. Tax rates are almost always going up, and tax assessments are almost always going up. And so your tax bill is not a set number. It is a number that continues to rise, which is a good thing. Like if you see your property tax bill go up, it probably means your home or your property is worth more, but you're also paying the same rate. And so it is a surprise bill for a lot of people if they're not thinking ahead and not budgeting for that appreciation every single year. That's why we focus on property tax bills and make sure that people not only understand it. We have clients we help understand, pay, and project their property tax bills. And then sometimes we don't save the money, but it's still a valuable service in that regard. So just understanding that expense, it's such a large expense. It continues to grow that you can stay on top of it.
Mm-hmm. So talk about, so far your journey, how much tax value have you helped assess, and who's been adopting your platform the fastest among individual homeowners? You mentioned potential commercial real estate owners or even institutional investors.
Yeah, the biggest gap in the market really was direct to consumer. We started direct to consumer and signed up tons of homes. We now represent over 700,000 homes across the country in helping them understand, pay, and project and reduce their property tax bill. But as you can imagine, there's tons of people who own homes who own other types of real estate. Consumers are the largest owner of real estate in the country. And so they often own a franchisee restaurant or a strip mall, or, oh, I actually have a car wash business and a car dealership. And so it very much bled into, can you help me with something else? And that really got us going down. A big portion of our business today is SMB real estate. And so that's everything from auto parts shops to trampoline parks and everywhere in between. And then large apartment buildings, large office buildings. If you get into the multi-$100 million apartment complex space, that goes to litigation from a property tax perspective almost every year. Just because it's such a big bill, it is worth litigating. And so that happens in most major metro areas. And so where our software and our staff and our tax consultants across the country can really make a difference for the majority of people without going straight to litigation is from $0 to $50 million in asset value. And then above that, we also have partners in litigation and we'll continue to push up. But yeah, we help anybody and everybody with real property, and everyone has a big property tax bill and we can help.
100%. And everyone thinks their tax bill is too high, and a lot of them seem to be right. So talk about your approach. You just started hinting at your 50 plus to local tax consultants, but how do you blend AI powered valuation models, humans around the country, and how have you made this combination automated success?
Yeah. We've analyzed every property in the country with software and algorithms and identified where we think things are overvalued from a tax assessment perspective. And then we get fine details from every owner, whether it be they're connecting into their ERD or Appfolio to make sure that their income is reflected in our valuation approach. But there's really only 3 ways to value real estate: sales approach, cost approach, income approach. And we use all 3 of those approaches to identify the best approach to really argue for the lowest value possible. That's what we're going to argue for on your behalf. And like you said, we have over 80 tax consultants across the country this year in talking to the government. We can't AI the government, and the government's not necessarily adopting AI very quickly. And so there is a human back and forth, taking evidence packets, taking analysis that we've done ahead of time, both with the human touch and supplemented by AI. A lot of the stuff that AI takes away for us is like every single piece of mail we get is scanned and automated and digitized very quickly. And we get millions of pieces of mail a year. And so like we're taking out a lot of the operational costs and passing that on to our clients and improving the efficiency of the business in utilizing AI to cut costs, but then we still need the person up front to do the work with the government. And so we're combining valuation methodologies with smart ways to process a lot of the operational capacity and things we have to do to get appeals done and file exemptions and all that for our clients. And then we use humans at the end, human in the loop, to take all that data and argue on the behalf of all our clients to make sure their tax bills, they don't pay more than their fair share.
That's fascinating. And this is, I would say, quite common when dealing with stuff that has to do with governments and local entities. Behind closed doors, you have a mechanical Turk, a human working the legacy systems, while on the front end, what the client sees is high-end technology and blended across the process. But fascinating how a lot of PropTech companies' jobs is just to bridge that gap between the legacy world that is still very much in place and very much guiding how something so big as tax and get charged and get assessed. Anyway, so talk about your success metrics. What's your appeal success rate, or what's the average savings, say, for a homeowner, or any metrics that you can share for commercial real estate owners as well?
The cleanest, and it does differentiate by residential, we can save between 5 and 6% of your tax bill every single year, and over 80% of the time we're successful. And so totally different by geography, right? Like it is harder to win in New York City than it is in Miami, and it's even easier to win in Houston. And so like it's totally different depending on the tax code and different aspects and how we can dig into that. On the commercial side, we see our average fluctuates between 11 and 15%. And so there's a lot more avenues from just because you can value real estate that generates income in different ways, whereas it's harder to value homes in different ways. And there's many more comps. That's why we save less on homes, if that makes sense.
Going back to your previous point about they use 3 different ways to underwrite now, Are you able to then run the three of them each time and then just choose the one that is the most beneficial?
Yes, depending on the tax code, they will value certain valuation methodologies slightly differently. And so that's what I meant
Weighted.
by for homes. When you're looking at a single family home and they have 5 sales of comparable properties in the neighborhood, they're not going to use the cost approach. They have fair market activity to indicate the value of that real estate. Whereas if it's a daycare and there isn't a daycare for the next 30 miles, they're looking at the income probably to similar businesses, not even daycares. And so totally depends what level of comparables you have in how you value it.
And daycare isn't selling daycare, they're selling peace of mind. That's priceless. Let's go back to where we were. So now talk about your business model. So how do you align incentives, right? I'm assuming you only want to charge when someone actually gets savings on their tax bill.
Yep, we do exactly that. And so we try and make it as no-brainer as possible for people to sign up. We operate entirely on a contingency fee. We charge 25 to 35%, depending on geography and really like the cost it is to service that appeal across our different types of assets and portfolios. But yeah, if we don't save you any money, we'll never charge you anything. And if we do save you money, we take a piece of what we saved you. So at the end of the day, it's a no-brainer for people to sign up and try. Worst case scenario, nothing happens. You pay the exact same bill. Best case scenario, we save you a bunch of money.
Yeah, win-win, no-brainer, as you say. Now, let's dive into one of your case studies and talk a little bit more specific. So you had a client with 124 properties across Texas, an investor. So yeah, how does that look like at scale, and what's the value proposition specifically for SFR in commercial real estate portfolios?
SFR is really perfect for us because people with 100 properties, it's a big business. That is a big business they are running, and they're typically getting great services. They probably have an attorney, and that attorney doesn't have the time or can't justify doing tax appeals on 100 properties, right? Because it is so manual. And so this is like the perfect example for Ownwell. We've automated so much of the process that our tax consultants are able to, within a quick amount of time, go through that whole portfolio, get to savings estimates that are realistic, tell you how much we think we can save you. You sign up, we go do all the work for you and come back with tax savings. And how you win in Dallas, like I was saying earlier, how you argue in Dallas can be slightly different than Houston. And we've backed into different models that is in the tax code and in these specific tax assessors' offices. They all use different mass appraisal technology to make sure we get the best results for our clients. So oftentimes when we're presenting results back to this client, we say like, here's how we did this year. Here's how much we reduced you. And here's how the average result in that county went. And this is why we are this much better than the average result. And so we always hold ourselves to the highest bar of not only did we save our clients as much money as we can, but we are saving them more money than if they went with a competitor or a tax attorney or something like that.
Interesting. Does it come down to the actual code, if it's more favorable to the ownership side versus the tax collector side, or is it more about how many people are actually working on tax assessment and cases in the given jurisdiction, or a mix of how archaic or modern it is?
All of the above. And so that first one, I think you nailed it. Like the way in which you can argue cases in different geographies changes. Even the burden of proof in Texas or Georgia, for example, the homeowner, if there's what's called like a quasi appraisal review board hearing, and if the assessor doesn't show up, the property owner wins by default. Whereas they show up. I'm not saying that they don't show
They
up.
drive 6 hours if it's what it takes.
But in Washington State, if we don't show up, they win. And so it's different. The burden of proof,
radically different.
They have to prove us wrong. Whereas in Washington State, I have to prove them wrong. And that makes quite a big difference. But the appraisal technology, sometimes they'll use Marshall and Swift for adjustments, which is like a very well-known adjustment appraisal technology. And this square footage in this geography is worth that, or it was just renovated in XYZ year and it is worth this much more for that. And then in other geographies, they'll use something totally different and they'll have their own technology. And so we often have to back into how are they valuing real estate and how do we speak their language so that when we're talking back and forth, we're not just speaking past each other and we're actually like, okay, these are the known truths that we have together and here's how we're going to argue real estate back and forth. And then there are places where there are major metro areas where, last piece I'll say is, because this is about the number of people, assessors are outstaffed, right? There are hundreds of tax assessors and there are 300 million properties in the country to assess. And so they're using large like technology solutions, mass appraisal technology to spit out a number very similar to like Zestimate or something like that. And so there's always going to be things that are imprecise, but in certain areas, let's say like areas of Dallas where big portions of neighborhoods or townhomes across certain areas in Long Island look identical. And so this townhome looks the exact same inside and out as the one right next to it that sold 3 months ago. That is a very easy property to value.
Oh.
Whereas if it's in Beverly Hills, there's a 1960s house next to a 2025 house that's a gazillion dollars, and this one's a teardown, right? Like very hard to value. And so it really depends about the diversity in neighborhoods as well.
Fascinating. Yeah. So growing across jurisdictions, it's much less of a copy paste and more of a copy and paste special, if you will. You really got to tweak to the local market, the culture, and ultimately the code, and what precedents exist, I guess. Fascinating. So let's see, sizing the market opportunity here. There's $1 trillion spent on property taxes, as we said. Only a fraction is eligible for owner's appeal. So how much upside do you think still is untapped?
Yeah, we're growing rapidly. The majority of people, still less than 10% of people, do anything about the property tax bill. And so at the very least, like we can 10x the business from here in trying to raise awareness and help more and more people. And that's the mission. Democratize access to real estate expertise. That's what we're on the path to do. If you do like simple top-down math, $1 trillion spent in property taxes roughly, and that's growing at the same rate real estate is appreciating, then also inflation. And so like you can almost say that's growing 5 to 10% per year. And then if we save people 5 to 6%, this is a $50 to $60 billion opportunity in what we can do for people. And that's just in tax appeal. There's a lot. We provide tax payments. We provide tax forecasts. We help people reduce their insurance bills. We help people reduce their loan costs. And so there's lots of things we can do. The business is beyond property taxes at this point, but that is our marquee service that we start with and really build that trusted relationship with clients first before we can recommend other things that help them with.
This episode is brought to you in collaboration with CREtech, one of the most valuable events I attend each year. It's happening October 21st and 22nd at the Javits Center in New York. Whether you're a real estate owner, operator, developer, or tenant, this is where the industry comes together to share ideas, explore new tech, and build relationships that actually move the business forward. I've had the chance to grow real partnerships and discover solutions here that I probably wouldn't have come across otherwise. And this year, CREtech is rolling out something new for 2025 that I get to tell you about: the Hosted Meetings Program. It's designed for qualified real estate professionals, and it covers your full event pass plus up to $800 in travel and hotel costs. All they ask in return is that you take a few short, curated one-on-one meetings with tech companies that align with your business needs. It's a smart, low-pressure way to explore what's out there without the typical event costs. If your company owns or manages 1,000 residential units or 1 million square feet of commercial real estate, and you're involved in tech or operational decision-making, this is definitely worth checking out. You can learn more in the show notes and see if you qualify by reaching out to us at tangentcommunity@gmail.com. I'd love to help you get set up and hang out at the event. Use our code PARTNERTANGENT20 for 20% off your ticket. See you at CREtech. Now, back to the show. Focus. That's great. And you also anticipated my next question, which is about platform expansion. So do you see Ownwell evolving beyond taxes? As you already mentioned, some of them, insurance, utility billing, other expense categories?
Yeah, we'd love to hit them all. Not everybody can save on every category. The way we think about it is like, there's the loan, there's your property tax bill, there's your insurance, there's your utilities, and there's maintenance. And those are like in the order of size, really. We'll see if they cut rates. Like refi is becoming more and more of an opportunity with how rates are trending. There are some people in our user base that have 7% interest rates, and we can offer them 6. And is that worth doing right now, or should they wait? We'll find out. And then property tax we've got covered. Insurance, yes, we have partners and we are licensed in the way that we can help people make sure they have the right insurance, whether it's landlord insurance or home insurance. We have partners and basically saying, do you need help on your insurance coverage? Are you being ripped off because you stayed with the same provider for 5 years and they jack it up we analyze and make sure you can save there. Utilities, you can switch in some geographies, and we actually have a product in some geographies. Pay your utility bill. You can't switch it. And then last one, maintenance is really hard, but we have what we call Ownwell Concierge. And that's really us trying to provide personalized recommendations. And you can text us and basically say anybody to recommend. And we have a list of A+ people that we can recommend, or we can point you in the right direction. That's what we call Ownwell Concierge, is that hitting those 5 expense categories. We're trying to build that out and typically a customer comes in and they experience the tax product. And then if they have a good experience and hopefully we save them some money, we can say, hey, how else can we help?
Fascinating. The insurance side, it not only reminds me of my current employer, ProCentry, but when it comes to reducing insurance costs, but also my previous employer, Cape Analytics. Cape actually got acquired by Moody's not too long ago, and Cape was helping insurance companies make sure that policies aren't under or overinsured by analyzing aerial imagery of single-family homes. Are you taking into account like the actual images, the actual physical condition of homes in any way with stuff like imagery or other data?
No, I think we would love to get to a point where we're helping in the underwriting process. But today it is really, hey, we know we have 68,000 customers in your geography, and we know what insurance should be relative to the value of your home, and you're undercovered. We do have a analysis that shows like, hey, you're undercovered compared to your neighbors, you're overcovered compared to your neighbors. But then people also have preferences. Like, do you want your dwelling coverage to be a very comfortable replacement cost, or do you want to take a little risk yourself and reduce that and have a lower bill? And people have different preferences, especially depending on their loan. But totally makes sense how insurers, especially when you're working with large amounts of risk, need to look from an aerial perspective to make sure that they're addressing things correctly.
Shifting gears a little bit here, you've clearly built and keep building trust across real estate and real estate tech. And you're asking people, investors, homeowners, to trust you with their tax and their payment data. So what does it take to build credibility and confidence for founders out there and everyone else listening?
From a building credibility and confidence to get more customers, or to get investors and employees on board?
I mean, the former, but both the latter is ever present and
Interesting.
very relevant.
Yeah. One of the first questions we got, especially for our business model, which is like, hey, sign up, it doesn't cost you anything, we'll save you money, was like, is this a scam? And so every YC company has like the tried and true hero image, sign up here, Google reviews, here's all of our references, like truly works. And so hearing from your neighbors, 20 to 30% of our customers come from word of mouth. And so have a good experience, drive referrals, drive conversion, drive people saying good things about you in the wild. And we always try and maximize. And that's one thing, like our customer support team, some people, especially associated with their taxes, want to talk to a human. And yes, AI is incredible at replying to things, but we've made the commitment as a business, like we will always have someone pick up the phone and answer your questions if you want it to be like that, because people want to talk to someone who understands their problems. Just sticking to your values, your mission and vision from an organization, and then proving it. Get the reps in. There are going to be early adopters, and then utilize those early adopters to convince the next segment of customers that this is something to be trusted. This is a cliche to say, but of course, don't ever do anything that you wouldn't want to see printed on the front of a newspaper. Run a good business and provide value to your customers, and don't rip them off, and it'll lead to good things.
Yep. It's easier said than done, but yeah, it's a low bar, but it's a high bar at the same time. Now, when it comes to selling to homeowners, now SFR operators, large commercial real estate investors, what's something that maybe from your investor hat as well, what's something that PropTech founders should understand more, or how to sell into these very different customer profiles?
The first two things that come to mind are over personalized everything. And so like the amount of AI personalized emails I get that I can tell like the font is different where the AI dropped it, it's like I'm losing my mind unsubscribing from these things. But if a salesperson reaches out and it's like, clearly articulate about a problem I genuinely have, they'd probably get a response from me. I hope this didn't just lead to a bunch of sales emails. But you get my point. Like, over personalize your message before, like, hey, are you interested in new HR software? Like, absolutely not. Hey, are your 98 employees in Austin, Texas looking for a new wellness credit benefit? Yeah, maybe. And get to personalization. And then the second piece I was going to say, like, make the decision as easy as possible. And so, again, go further through the process of, like, don't try and get them on a call. Have the one-click link in there. If they want to book time, put that in there. If they want to sign up by themselves, put that in there and have it pre-populated. Make it as easy as possible to close. Do as much work for the person who you're selling to before you even sell. And so, yes, like, trial and error, you're going to get better. But if you're selling to homeowners or real estate investors, they want to know that it is very personalized. And I think that's led to a lot of success for us. It's like, this is your property. We've done an analysis. We are likely sure that we can save you money if what we know is correct, and sign up. There's no downside. Like, that has worked. And so I would echo that from an investor sentiment. And then also, if you're looking for a new business to start, make sure it's something that people can say yes to easily. Yeah, the best products are the ones that sell themselves.
Yeah, I love the personalization aspect. That's yielded a lot of success in the past, not only in building relationships of people that I just wanted to get in touch with, learn from, partner with, sell to. And it's oftentimes things that don't scale. And it's because they don't scale that are important to do, and especially at the beginning when, you really want to make sure that they know you're not just throwing stuff to the wall and see what sticks, but actually you care because you did the homework. And when it comes to removing friction, how many forums I see that it's okay to want to capture data and learn more about your prospects before you speak with them and everything, but a lot of times you're just turning them off from even contacting you, which is ultimately what you want, right? So last but not least, Colton, collaboration superpower. If you could choose one person, historic or living, to do a partnership with, who would it be? And don't say Steve Jobs, because the last person said Steve Jobs.
No, I've got a better one because it might actually work. Our biggest market is Texas, and I'm trying to get Matthew McConaughey.
Wow.
First for you. This is a consumer-facing business, clearly. Yeah, I think, like, Matthew McConaughey would raise the education and awareness bar for real for us if we could get him more involved in the business, and something I should probably work on. But that was the first thing that came to mind as we're thinking about, like, new consumer partners next year.
Matthew McConaughey actually listens to Tangent, and he's been calling us every month to want to be featured in, but his only visibly or publicly owned real estate that he's involved with is the Austin FC Stadium, probably. So
Yeah.
Go
Probably.
Verde. Colton, where can Tangent listeners, homeowners, SFR operators, commercial real estate investors learn more about Ownwell and connect with you?
We tried to live the words that I spoke earlier. We try to make it as easy as possible to sign up. So the easiest thing to do, enter your address on our website at ownwell.com, browse around, get more information on us, see case studies. But if you enter your address, we'll give you a savings estimate, and you can either connect with our sales folks or sign up on your own through the website as easy as possible. And hopefully everything's there that you could ever need to learn about Ownwell to get you to a decision point. But again, we have people who are willing to pick up the phone and talk to you if you want. For myself personally, LinkedIn is my mode of choice. So hit me on LinkedIn if you want to connect professionally, or go through Ownwell if you're looking for help with your property taxes.
Colton Pace, co-founder and CEO of Ownwell. Save money on property taxes. Thank you so much for coming to Tandem today, sharing your exciting background, company, and your vision with us.
Absolutely.
Muchas gracias, and thank you for listening to this episode of Tangent PropTech. If you learned something new or enjoyed the conversation, text a friend the link to this episode right now. You can find links, resources, and ways to connect with us in the show notes, or reach out anytime at tangentcommunity@gmail.com. We love interview suggestions, topic ideas, or just a friendly hello. Tangent PropTech is co-hosted by me, Edward Cohen, along with Jeffrey Berman and Zach Aarons. Because the best real estate ideas start with a tangent.